now. You're watching Market Cafe with me, Kanishka, Sarkar and Ankita, Saxena, a show where we'll take you through all the local and global cues, all that you need to keep on your radar today and the stocks you need to keep on your list today. But before that, on to the top story today. Ankita, big GST refunds coming in.
Kanishka, that is the top headline. In fact, a big positive coming in as far as Indian markets are also concerned. The big overhaul in the GST. This Independence Day, Prime Minister Narendra Modi wrapped up the tricolour in a pre-Diwali gift basket for the economy and the markets. Now, everyday GST will come down, putting more money in the consumers' pockets. A move brokerages say could cost nearly $18 billion, but spark a fresh consumption boom. Alongside that, a 1 lakh crore Rozgar Yojana takes aim at the jobs. Semiconductors stamped Made in India will hit shelves by year-end, while Mission Hydrogen, a tenfold nuclear expansion by 2047, and a national deep water exploration dive chart India's energy independence. Now, for the markets, it could spark fireworks. Remember, the group of ministers headed by the Finance Minister Nirmala Sitharaman is set to meet next week. I have my colleague Prakash Vidarshi now joining us with the developments of what exactly transpired with the GST overhaul. Over to you, Prakash.
Yeah, very significant announcement by the Prime Minister from the Red Fort. It's a clear, the Prime Minister has given clear glimpse of the next set of GST reforms which is in the offing. Of course, it's a mega reforms being called the GST 2.0, where a lot of significant development and changes we can witness going forward. The Prime Minister has underscored the proposed reforms which is already underway, and there are three important pillars where these expected reforms will be based. The first one is, of course, structural reforms, rate rationalization, and ease of living. When it comes to structural reforms, of course, the issues such as inverted duty structure, resolving classification-related issues, stability and predictability, that will be taken care of. Along with that, when it comes to rate rationalization, as you are aware that the GST GOM has already been constituted by the GST Council to look after comprehensive rate rationalization, where a lot of proposals are there. Deputy Chief Minister of Bihar is convener of this GOM, have taken several rounds of meetings and expected to submit his report in the next GST Council meeting. Along with that, when it comes to ease of living, where registration, return, refund-related issues will be taken care of. That will be simplified for the betterment of course, industry. The government will take care of all these things. In fact, some cost relief likely to be given as well. So these are the important aspects of the GST 2.0. The Prime Minister himself has given clear sign of the next set of GST reforms, where we're expecting some mega development, expecting some mega relief under GST 2.0. Back to you.
All right, thank you so much, Prakash, for taking us through all that GST 2.0 really means and how it's going to impact the respective sectors. But moving on, let's also take a look at how corporates are responding to this GST 2.0. Now, India Inc. is hailing the government's big GST push. NSE's Ashish Chauhan says that Prime Minister Modi's confidence speech has set the tone for the economy. M&M's Rajesh Jejurikar sees a huge upside for autos from this GST 2.0, calling it a major GDP multiplier. On the other hand, we have Biocon's Kiran Mazumdar-Shaw, who has welcomed next-gen GST reforms, stressing the need for simplification. And the fertilizer industry, on the other hand, hopes for GST relief continues with no hikes ahead. Let's listen in.
This was a very confident speech that gave a direction to India's economy and India's society, and also talked about the reforms that are being undertaken by his government.
India is still a very under-penetrated auto market. Less than 8 or 9% of the households in India own a car. So there is a huge upside, and the auto industry has a huge GDP multiplier. Is when auto manufacturing goes up, it adds jobs in the supplier ecosystem, it adds jobs in the front-end dealer ecosystem. So there is a huge multiplier effect of an auto growth story. And when that auto growth story can create global platforms and global products because you make more in India for the Indian market as well as export. I think this sector has the greatest ability to create impact on the growth story really. Yeah.
I think GST reforms have been an ask for many years now. I think there has to be a rationalization, there has to be a simplification. And I think, I'm sure the Prime Minister will really ensure that GST reforms will, make a big impact on cost of living, cost of consumption. And I'm sure citizens will hugely benefit from these reforms.
Fertilizer industry is continuously writing to the Department of Fertilizer as well as the Government of India, and also the subsequent meetings of GST Council.
Right, so that's the fine print of the slabs and the GST overhaul. But what about the market play? Brokerages are really already punching in the numbers. Bernstein says GST cuts could mean an $18 billion hit to the revenues, but a $13 billion boost to consumption, with consumers, autos and durables being in the sweet spot. Now, the common thread, consumption, looks set to shine, while industrials and capex could take a backseat. To tell us which sectors stand to benefit the most and where the investors should be cautious, let's go across to my colleague Sharad, who's standing by with all the details. Take it away, Sharad.
Well, interestingly, the GST rate slab is expected to come into two slabs only, and the important thing is from 28 to 18%. It's likely that the consumer goods would be in focus, where there will be likely benefit coming in. Blue Star, Voltas, Havells, Amber Enterprises, and even Dixon Tech make it to this list. Also, the cement pack would be very interesting from 28 to 18%, and that will be a very major relief. And the larger names will be very beneficial for them. And this month itself, the pricing has been stable despite the monsoon season coming in. Also, in the auto segment would be buzzing as well, especially if the reduction happens, and this is happening before the festive season actually takes off, and that will be auguring really well for the consumers as well. And especially in the two-wheeler segment and the entry-level car segment, we could see a good up move coming in. And also in the three-wheeler segment, that's why I've included Atul Auto and Force Motors as well. Also, there's an important slab of almost 12%, which can go down to 5% or the nil table, and that is very important. Be it hair oil, jam, fruit juices, namkeens, medical items, bicycles, dairy and soaps as well. Now let's look at which stocks would be there in focus because of this move, and this would be beneficial for Dabur, Mrs. Bector's, ITC, Bikaji Foods, Pratap Snacks. Also, we have Cycles, Tube Investments, Marico, Bajaj Consumer, and Parag Milk actually making it to the list as well. Also, from the medical devices, we have Poly Medicure as well. So, two important benefits coming in for GST rationalization. Also, agriculture, fertilizers, renewable energy and construction. As per sources to ET now, these segment also we are expecting a downtick in GST coming in, and this would benefit, of course, the fertilizer players, the agri-theme players such as Kaveri Seed, Rallis India making it to the list, and also the solar players and the wind energy players as well, as more benefits would be auguring for these companies. These include NTPC Green, Inox Energy, Coromandel, and even L&T and NCC and IRB Infra as well, because there would be a move happening in the infra space as well. Textile sector as well, beneficiary of GST inverted structures, and rates are likely to come down, and of course they have been raising a lot of issues for exports also to the government. And stocks such as Indocount, Nahar Spinning, SP Apparels, PDS, Welspun India, these stocks would be in our radar, as well as the textile segment. They expect a domestic push as well, especially on the range of the prices between 1,000 rupees on the finished goods or below the 1,000 rupees finished goods as well. And these stocks you could see on the screen, there can be a good momentum in these stocks as well. 40% GST on Sin goods is also likely there, and this would be negative for Nazara Tech, Delta Corp, ITC, VST Industries, Godfrey Phillips, Varun Beverages, and also luxury segments such as Stanley Ethos, Landmark Cars and Popular Vehicles as well. So this might be negative in the day's trade. And overall, special GST rates are expected to continue when it comes for diamond and jewelry. The stocks such as Vaibhav Global, Rajesh Exports, Senco Kalyan would be actually also in the trade, but not much move is expected from there. And these are the important segments which you would be looking out for. Less likely rate cuts includes pens, packaging, container boxes and capital goods, which include Link, DOMS, JK Paper, Cummins, Thermax and even Siemens India. So these are the important stocks which would be in focus as a whole lot of GST rationalization takes place, and this would be effective from October onwards.
All right, thank you so much, Sharad, for taking us through the entire sectoral impact of the GST rationalization move. But moving on, now we have Varun joining us to give us an overview of what brokerages are making of this move. Houses like Bernstein, Kotak and MK, what are they saying about this GST 2.0? Varun, over to you. Good morning.
Good morning. So definitely this GST rate rationalization will actually impact the economy as a whole. It will impact the GST collection. It would impact the overall GDP of the country. But yes, it would give a consumption boost, and that is actually going to help sentimentally at least the markets today. Now Bernstein says that an optimistic case of this measure will result in a net consumption boost of around $13 billion, and also it can push the overall central deficit by around 20 basis points. But a capex cut of around 5% will limit the overall impact to around 5 to 10 basis points. This can also lead to pressure on the rupee. But yes, the domestic themes that would actually do better. The overall fiscal deficit, which was expected to be around 4.3, can go up to around 4.4%. But yes, the overall losses of GST, which can be to the tune of around 1.57 lakh crores, that would be divided between the center and the state, and the center could actually take the larger share of the losses that could happen because of this overall GST rationalization. But they believe that the equity markets will actually cheer this overall fiscal push, and a recovery in demand in the economy will actually push the private overall spends going ahead. Also, they expect Nifty to continue to expect higher double-digit single-digit return for the rest of the year. They are overweight on consumer, equal weight on utilities, and underweight on industrials. Now, Kotak says that it could actually impact the overall consumption theme, and the net rate may provide 2.3 lakh crore boost to the overall economy, and this would be positive for autos and durables, although the cement sector will see limited benefit. And also they are saying there could be some price changes in the coming days by some of the companies. Now MK says that this will actually lead to overall losses of around 0.4% of GDP for the government. So, and also this will impact the CPI inflation to the tune of 50 to 60 basis points. Also you have Motilal Oswal, which says that it will actually reduce the retail prices by around 4 to 5%, easing overall household budgets. And they say that companies like HUL, Britannia, Maruti, Ashok Leyland, Voltas, these are the companies which could actually benefit. And also Antique says that this will actually provide a big consumption boost to the economy, and the rationalization coupled with with other consumption tailwinds could actually drive the second half recovery, supported by the overall strong festive demand. So it's a boost for the economy. No doubt there could be some impact on GDP, there could be some impact on GST collection, but yes, it will actually lead to a consumption boost and sentimentally positive for the markets as well.
While this could have some implications as far as the capex is concerned, or the treasury is concerned for the government, but it is a big positive sentimentally for the markets. And today also we are expecting a jump up of a gap up opening of almost 200 odd points. But let's also see what other announcements did PM Modi make during his Independence Day speech. My colleague Snehi is standing by with the details.
Well, yes, so if we take a look at all the other announcements that have been made apart from GST on Independence Day, a lot of sectors, lots of stocks are going to be in focus, because the key themes of those speech were defense, make in India, Atmanirbharta, clean energy, more jobs for the youth. So lots of those themes were in focus. First up, let's understand on defense, because he's spoken about the need for more indigenous defense equipment. So names like HAL, BDL, Mascot Dock, Garden Reach, Cochin Shipyard, all of these stocks could be in focus on the back of that. He's also stressed on the need for made in India defense jets. So MTAR Tech, BEML, HAL, once again, that specializes in jets, could be in focus. Moving away from that, the next announcement came on the front of semiconductor chips and the need for these to be made in India, made for India, and made by Indians. So the sector in focus will be chip manufacturing, and some stocks are going to be Keynes, Tech, CG Power, Tata Elxsi. All of these stocks that work in the semiconductor space are going to be very important to focus on. These are, of course, some of the semiconductor stocks that we are talking about. Moving away from that, clean energy and mission green hydrogen is going to be India's next area of focus, is what the Prime Minister has said. So you have stocks like Reliance, L&T, ONGC, GAIL, NTPC that could be in focus on the back of that. Also also, while we're talking about clean energy, nuclear energy is another aspect that he has spoken about, and the privatization of that now. So HCC, BHEL, L&T, MTAR Tech, these could be some stocks that could be in focus. In terms of solar capacity, you also have names like Tata Power, Adani Green, Wari, Premier Energies. All of these stocks could be in focus as well, along with the KPI Green and JSW Energy. Let's move away from that and talk about deep water, because he has also said that National Deep Water Exploration Mission will be commenced soon. So it's names like Reliance, ONGC, Deep Industries and Aban Offshore that are going to be in focus. Then they've spoken about the launching of national critical missions, in where the exploration of critical minerals is going on in more than 1,200 regions. So on the back of these stocks could be NMDC, JMDC, Vedanta, also positive for EV players. So Tata Motors and M&M could also be in focus. Then he's also spoken about India's foray into space exploration. So it's Apollo Micro and HAL that could be once again in focus on the back of that. But shifting focus to some pharma names, because he has spoken about the need for affordable indigenously produced medicines. So you have Dr. Reddy's, Lupin, Torrent Pharma, Alchem, Sun Pharma, Spark that could once again be in focus. Then he has also stressed upon the need for indigenous focused deep tech capabilities. So it's a couple of IT stocks like TCS, Infosys, Persistent could be in focus. And then lastly, two big announcements coming in. First, on the fertilizer front, how we need to be producing our own fertilizer back home and reducing dependence overseas. So RCF, FACT, National Fertilizer. And then also he's spoken about the National Employment Mission, the Pradhan Mantri Viksit Bharat Rozgar Yojana. So staffing companies like Quest Corp, Team Crystal SIS could be in focus. So a lot of stocks to watch out for on the back of all of these announcements that were made other than GST by PM Modi in the Independence Day speech.
All right, thank you so much, Snehi, for taking us to all the announcements that Prime Minister Modi made during his Independence Day speech and all the stocks that will be impacted because of those announcements. But on that note, we'll take a very short break. Be right back with more updates on the other side. For all the indices, at least two of them ended in the red, but for the week, all three of them ended on a high note, logging their second straight week of gains. The Dow rose about 1.7%, the S&P 500 gained 0.9%, and the Nasdaq, that added 0.8%. Meanwhile, small cap stocks were the standout, surging over 3% as investors priced in the likelihood of rate cuts from the US Fed. Now, this week, all eyes will be on Fed's annual Jackson Hole Symposium, where markets will be looking for signals on the timing and pace of rate cut going forward in this year. Now, traders are already betting on an 85% chance of a September rate cut as per reports. Now, on the corporate front, earnings season is nearly winding down, but big retailers will take the center stage today with results from Walmart, Target and Home Depot expected later today, and to give a fresh insight into what consumer spending behavior is looking like. So that's how the US market setup is looking like, Ankita. But how are things on the crude front?
Well, absolutely. This is how the US markets ended the week. But as far as oil is concerned, oil prices slipped in early Asian trade on Monday as the United States did not exert more pressure on Russia to end the Ukraine war by implementing further measures to disrupt Moscow's oil exports after precedent from both the countries met on Friday. Brent crude futures dropped 32 cents or 0.4% to $65.53 a barrel. That's where Brent crude stands at, and WTI crude was at $62.57 a barrel, down 23 cents. And the US President Donald Trump, remember, met the Russian President Vladimir Putin in Alaska on Friday, and they emerged more aligned with Moscow on seeking a peace deal instead of a ceasefire first. So on the back of that, we did see a bit of a moderation coming in on the crude prices as well. But for now, we're joined by Seth R. Freeman, who's the Senior Managing Director of Glass Ranta Advisory and Capital Group LLC, who's joining us now. Hi, Mr. Freeman. Good morning to you, and thank you so much for taking the time out and joining us today. Mr. Freeman, globally, the way things are shaping up, especially on as far as the US is concerned, we are hoping for a September rate cut, from the Federal Reserve. But if you look at the way the markets are moving, the markets are sitting at record level highs. But the inflation data that came out some time back, that showed a bit of an uptick coming in because, sooner or later, the tariffs will begin to show on the price hikes or the price increases of the inflation coming in the US. What will be a Fed stance in that case?
Well, the Fed looks at the totality of data, of course, but we're also seeing employment rates starting to decline. And possibly that's sort of balancing the view in terms of this small increase in inflation that was just reported. It's very amazing that in a matter of probably about 2 weeks, we've gone from a 65% chance of a rate decrease to a 45% chance, and now with the Jackson Hole Assembly, an 85% chance of a decrease. So it's very volatile, and I'm sure the Fed is looking at all the data.
All right. Hi, Mr. Freeman. This is Kanishka also joining in. Like you said, it is very volatile. I wanted to understand, what do you think the impact on markets is going to be? How do you expect the U.S. markets to start this Monday morning? We have had 2 weeks of winning, even though Friday wasn't all that positive for S&P 500 and NASDAQ. But for the rest of the week, what is your expectations with the Jackson Hole Symposium due this week? How do you expect the markets to perform this week?
I think they're going to be just looking for any kind of signals from Jackson Hole and looking and seeing what happens Monday with the meetings with President Zelensky and the European leaders. Coupled with that, of course, is the pending tariffs on India, among other countries, and how that plays into oil prices.
Now, one final quick question, taking a cue from what you just mentioned about the tariffs, the secondary tariffs on India. We already have a 50% tariff imposed in India, but we have a meeting that's coming up on the 25th of August where the U.S. delegate is traveling to India. What can we expect to come out of it?
I have to imagine there's going to be a conciliatory tone. It's been very rough, especially over the last 10 days. The reality presently, though, is that a major aspect of India's exports to the United States, electronics and also pharmaceuticals, are presently exempt. So let's assume that doesn't change. We're looking at higher diamond prices, and that's kind of at a time where, frankly, demand for natural diamonds is at a decline.
All right. Thank you, Mr. Freeman, for that and taking us through all the macro cues that we need to watch out for as far as global markets are concerned. Thank you so much for joining us this morning. On that note, we'll let you go. All right, then now shifting focus from markets to some other global stories. Let's now talk about the high-stakes meeting between U.S. President Donald Trump and Russian President Vladimir Putin, which concluded with no agreement to resolve Moscow's war in Ukraine after a nearly 3-hour summit in Alaska. Now, in a joint statement, both leaders claimed that progress on the war, with Trump saying that many key points were agreed upon, with only a few still under discussion. Meanwhile, the Russian president has invited Trump to Moscow for further round of talks. Now, remember, the meet comes after the president had warned of very severe consequences if Putin fails to move forward towards peace. Now, let's listen to the U.S. president addressing the joint press conference right after the Alaska meet.
Very profound, and I will say that I believe we had a very productive meeting. There were many, many points that we agreed on, most of them, I would say, a couple of big ones that we haven't quite gotten there, but we've made some headway. So there's no deal until there's a deal. I will call up NATO in a little while. I will call up the various people that I think are appropriate, and I'll, of course, call up President Zelensky and tell him about today's meeting.
And well, now after the high-stakes meeting in Alaska, U.S. President briefed Zelensky about the summit in a call which lasted over 1.5 hours. Ukraine President reaffirmed readiness to work with maximum effort to achieve peace, expressed support for Trump's proposal of a trilateral meeting. He also confirmed his visit to Washington today to meet Trump, stressing that European involvement remains crucial to ensure security guarantees. Trump confirmed Zelensky's upcoming Oval visit on Truth Social and says that if all goes well, a meeting with Russian counterpart could follow. Trump added that potentially millions of lives may be saved if these talks succeed. Now, remember, Putin has invited Trump to Moscow for next round of talks. My colleague Sumita Karid is joining us with the update. President Zelensky is all set to meet with President Trump today, just days after President Putin was accorded a red carpet rollout with no questions asked after he met with President Trump in Alaska past week. In fact, this visit was big on optics, a showcase of B-2 stealth bomber, the F-22 jets, showcasing US's military might, even though there was no concrete deal or an understanding after Trump and Putin spoke close to 3 hours on ending the Russia-Ukraine war. Vladimir Putin stated that all the root causes of the crisis must be eliminated, while Ukraine's security must, of course, be ensured. In fact, he also stated that there is an expectation that European capitals will not obstruct or attempt to derail progress. Now, similar sentiments were also echoed by Donald Trump, who called that meeting very productive. He said that we haven't quite gotten there, but we have made some headway. In fact, he also stated on his Truth Social platform that, of course, he had a conversation with European leaders as well. He said that he had a phone call with President Zelensky, including, and of course, the Secretary General of NATO as well. Meanwhile, as far as India is concerned, well, there could be some possible relief on India on the additional tariffs, given that Donald Trump stated that he wasn't immediately considering retaliatory tariffs, but might consider it into these tariffs in 2 or 3 weeks. So that remains to be seen. But how did the Ukrainian president really take all of this meeting? He said that, he supports Donald Trump's proposal for a trilateral meeting between Ukraine, US and Russia. Meanwhile, European leaders also echoed similar sentiments, and they asked for the next steps to be to have more inclusion of Zelensky more. They also stated that Ukraine must have security guarantees, and it's up to Ukraine to make those territorial decisions as well. So the key questions really remain ahead of that very crucial meeting is that what kind of territorial concessions will Ukraine agree to? What about European security and Ukraine's NATO membership?
All right, thank you, Sumita, for all those updates. But, before we let you go, the Chinese foreign minister will also visit India this week to boost bilateral ties and boundary talks that are on the agenda. Now, this visit comes just ahead of PM Modi's visit to China for the SCO summit later this month. What are the latest details that you are picking up on this front?
Chinese Foreign Minister Wang Yi is all set to visit India from August 18th till the 20th. This is essentially to boost bilateral ties and, of course, for boundary talks are on the agenda as well. And India and China, remember, they're looking at managing tensions and promoting collaboration. So what's on the agenda? Well, a meeting of Wang Yi, a bilateral meeting of Wang Yi with External Affairs Minister Dr. S.J. Shankar, and SR talks on India-China boundary question with NSA Ajit Doval as well. But let's understand the importance of this visit. This visit is coming in ahead of the Prime Minister's visit to China for the SCO summit later this month. In fact, the Prime Minister is all set to meet President Xi Jinping at the SCO summit. This is the Prime Minister's first visit to China since 2020 Ladakh standoff. This is also coming in even as the United States has imposed additional tariffs on India. They are also holding talks with China. For the meantime, they have extended relief on tariffs to China by another 90 days. In fact, on the question of tariffs, we did also hear from the Chinese ambassador to India. After those elevated tariffs were imposed upon India, the Chinese ambassador said that you give the bully an inch and he will take a mile. In fact, China has stood up against these unilateral tariffs, what calls unilateral bullying by the United States. So it remains to be seen the kind of conversations that happen between China and India at the foreign minister level and then at the SCO summit. What's important to, however, note is that is China serious about boosting ties with India, as its spokesperson and leadership have often stated? Because China, while it talks about boosting ties with India, it has put export curbs on exports of rare earth materials, specialty fertilizers as well. It also supported Pakistan during Operation Sindoor. So all of these things will come up during these conversations, these visits and these meetings. Remains to be seen to what extent this collaboration can be strengthened. All right, but really, what are the important comments coming in from around the world and what's going on the macro front? Let me get on board. My colleague Ashesha is joining us with a list of that. Take it away, Ashesha.
Well, yes, although the meeting that happened on 15th of August was largely inconclusive and all eyes are on the important meeting between Trump and Zelensky today, let's put the spotlight on some important commentary that came in from global leaders post that meeting. US President Donald Trump says that discussions were very productive. In fact, he also goes ahead and says that there is no deal until there is actually a deal. So that's an important comment that came in from Trump. The best way to end this conflict is to go directly to a peace agreement. He also says that this will end the war. A peace agreement could actually end the war and not a mere ceasefire agreement, which oftentimes does not hold up. So that's some important commentary from Trump. Vladimir Putin, meanwhile, says that meeting was very useful. It was timely. He also says that Russia respects the US position. They want to settle Ukrainian conflict peacefully, and that the conversation with Trump was very frank and substantive, and that also brings them closer to the necessary decision and to perhaps end the war with Ukraine. So that's Putin's take on the meeting that was held on the 15th of August. Meanwhile, we also have some commentary that has come in from Zelensky, where he says that Ukraine is ready for any kind of constructive cooperation. He says that Russia is refusing for a ceasefire agreement, which could probably complicate the situation going forward. But if Russia lacks the will to sign a ceasefire, it will take a lot of effort to get Russia implement peaceful coexistence with its neighbors. So that's some important commentary that has come in from Zelensky after that meeting, but of course all eyes will be on his meeting with Trump later tonight. Meanwhile, India's Ministry of External Affairs has also come out with their commentary, where they say that India appreciates the progress that has been made in the summit that was held, and that the way forward can only be through dialogue and diplomacy. So that's Ministry of External Affairs statement on this. Meanwhile, we also have some important commentary that came in from Trump today morning, where he says that big progress has been made on Russia. Stay tuned. Of course, he has not shared any other detail with respect to the meeting that is scheduled to happen today, but that's some commentary on the upcoming meeting. Meanwhile, we also have some other comments that came in from US President Donald Trump. First one, which pertains to India as well. He says that if he imposes secondary sanctions, it would be devastating for Russia. In fact, he also says that he may or might not do it. So the 50% tariff that have been imposed on India might actually come down to 25%. This is an important comment that pertains to India. So yes, important commentary that has come in from global leaders with respect to the meeting and of course the tariffs that have been levied on India.
Shesha, for all those top global comments. But on that note, we'll take a very short break. Be right back with more updates on the other side.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
That we import cheaper crude from Russia, and of course they also accuse us of selling it outside. But come 25th of August, when that is when the US delegation is traveling to India, what are going to be the points of discussion? And as far as crude is concerned, now we see the oil prices easing on the back of Russian supply concerns ease after that Trump and Putin meeting. So how do you see the crude prices moving now?
Well, good morning. That's it's very complex, and when we look back in retrospect over the last couple of weeks and take on board naturally those secondary costs that are being transferred to India, and one needs to be conscious of the weekend and what happened in Alaska, and then a possible meeting which is going to see maybe positive results come out of today in Washington. We need to be also conscious hedge funds are slashing their bullish bets by the most on WTI and the most in 16 years. So that's a first sign. So the market is in I think a structural decline as far as price, and that continuation could be very evident going into the next week or two. So there's a bit of safety there. And then the other side, of course, is what happens as far as negotiations, and is there a deal to be done before India meets with Washington again on the 25th. So it's a big week of market news and views.
All right. Hi, Peter. This is Kanishka also joining in. You were just mentioning how oil prices are expected to move. Any price target that you would like to give us, for the end of the year, that is calendar year 2025? How do you expect oil prices to end this year?
Well, you're running at about 62.5 for WTI at the moment. And good morning. So I think over the next couple of months, I think that downdraft will continue. I'm expecting somewhere in the 50s to be more or less a headline for WTI. For Brent, I think under $60 as well. The market's trading at the moment, that mid $65 range. And I think the overall momentum is going to be one of softness. We understand the positioning as far as OPEC Plus and America and the US continuing to drill and to raise their production. So I think there's going to be a good news story for consumers towards the Q4 and moving into Christmas.
Expecting the crude prices to come off, and it could be good news for the consumers. But the way the markets are moving, Wall Street is sitting at record high. Now with crude moderating, do you see a strong rally to continue by the end of this year as well? I mean, of course, there are other cues to watch out for as well. But crude playing a big, role in the raw material costs. Is that likely to buoy the sentiment on the market?
Softness in crude is going to be good for the consumer and naturally, hopefully, for inflation also. So there's the first theme there. And then the second part, of course, is the continuing bull market. Are we going to see, and what comes out of in the July minutes over this next couple of days from Jackson Hole and then leading into September, are we seeing possibly, up to an 80% probability of a rate cut? Do we see 50 or 25 or 0%? And then, as far as basis points, and then you're looking at what do we see for the rest of Q4? And if you listen to the likes of Scott Bessent, Treasury Secretary, he would like to see up to 1.5% cut out. So I think this is going to be, if that was to happen, that would absolutely put a rocket ship, I think, under US equities. So one needs to be very mindful of how this plays out in the next couple of months.
All right. Thank you so much, Peter, for taking us through all that. What these top global meets mean for the oil market and the rest of the commodity markets as well. On that note, we'll let you go. Thank you so much for joining us this morning. Well, on that note, we'll take a very short break. Be right back with more news and updates coming up on the other side.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to ask the hard questions.
It is a weekly expiry, so it is currently at 0.87. It is in the comfortable position, and for Bank Nifty, it is around 0.71, and it is also in the comfortable position. For the change in open interest, that is for the Nifty index future, we saw a short covering, a mild short covering, and that was around minus 0.66%, and the activity was short covering. For the highest open interest strike price, for put, it was around 24,000 and 23,500. On both the levels, the open interest is almost same. That's why I have taken both the levels. For call, it is 25,000. For Bank Nifty, change in open interest for index future, it is minus 2.43%, and the activity was short covering. For highest open interest strike prices for both put and call, it is on 57,000 only. And let's look for the FI long position. For FI, it is around 8.3%, and for DI, it is around 67.97%. And for FNO band, there are 4 shares in the FNO band: the PNB Housing, RBL Bank, PG Electroplast, and Titagar.
All right, Pulkit, thank you so much for joining us with the details of the FNO words. But also tell us, what are the various scenarios for Nifty Bank going ahead? What are the levels to watch out for? At least the implied start to Nifty, the GIFT Nifty, is showing a gap up start of almost 1% in trade.
Good morning, Ankita. So if we look towards the GIFT Nifty opening, it is indicating somewhere around 1% up. So let's look for the 2-3 scenarios. Let's say it is 1% gain. So the next resistance would be around 25,000. And if it is a 2% move, it will be around 25,300. And if it is a 3% move, we can expect the cross of 25,500 as well, and it will be 25,600. For Bank Nifty, that is the actual big brother. So Bank Nifty, again the 3 scenarios. If it is a 1% gain, we can expect a resistance around 56,000. For 2%, it will be around 56,600, and for 3%, it will be around 57,300. So yeah, these are the expectations from the market, that we can expect some gap up, and these will be the resistances.
All right. Thank you so much, Pulkit, for taking us through just that. And a 1% uptick is what we are expecting. As of now, the Nifty implied is suggesting a 1% higher start for the Indian markets. But on that note, we're completely timed out on this edition of Market Cafe. Ankita and I will take your leave, but don't go anywhere, as the market will take all the action forward.